GKFX Prime presents the week ahead. Hi everyone, I hope you're doing fantastically. I'm here as always to preview the week ahead in markets. I'd like to pretend that there is something else that matters, but this week the focus is still all on the coronavirus. Non-farm payrolls are out this Friday, so in this video I want to talk about how the pandemic is affecting the reaction in forex markets to economic data. I also want to give you one tip how I will spot the bottom in stock markets. Before I put the economic calendar on the screen, let me just take a second to explain how I think the economic data is working in these crazy markets. For example, normally it works like this. US unemployment data good equals dollar goes up. Well, not right now. The dollar is being treated as a haven asset. That means it's what people buy when they are scared. So right now, when unemployment data like US jobless claims is bad, something to be scared about, the dollar is more likely, in my opinion, to go up. Got it? This is not a perfect science because other things are happening outside of the economic data, like the huge $2 trillion US government stimulus package, but keep it in mind. So this week I will of course be watching non-farm payrolls on Friday. I suspect we might be about to break the longest run of monthly US jobs gain on record. For the first time in over 100 months, we are likely to get a negative number for NFP. The other things to watch will be manufacturing PMIs from across the globe. Markets brushed off the worst service PMIs on record last week. Maybe they won't this time. Can you believe that last week we saw the biggest one-day gain on Wall Street since 1933? The Dow jumped 11% in one day. If you just bought and sold on that day, you'd have made more than most pension funds do in a whole year. But here's the thing. 11% moves don't happen in a bull market. They happen in bear markets because investors are trading emotionally. So how can we use this information to tell when the bottom has finally come in? Well, I like to watch the VIX index. They call it the fear gauge. It's a measure of markets volatility in the S&P 500, but people use it to represent all US stocks. Right now it's about 60. When it falls below 30, I will start to think about being a long-term buyer of stocks again. Until then, I'm just going with the trend and selling the bounces in stocks in preparation for lower prices. Okay, good luck with trading this week, and please remember to like and subscribe.